Welcome back to our channel. Today, we're going to talk about Central Bank Digital Currencies, or CBDCs for short. These are digital versions of national currencies like the US dollar or the euro, controlled directly by central banks. While CBDCs are often portrayed as the future of money, there's another side to the story that you need to hear. By the end of this video, you'll understand what CBDCs are, how they work, and why they could be bad for our freedom and financial privacy. First, let's break down what a CBDC actually is. Imagine taking the physical cash in your wallet and turning it into a purely digital form. Unlike cryptocurrencies like Bitcoin, which are decentralized and operate on a blockchain, CBDCs are fully controlled by central banks. This means that the government or central authority would have complete control over the digital money supply. With a CBDC, the central bank could issue money directly to people and businesses without relying on traditional banks. This might sound convenient, but it also means that every transaction you make could be monitored, tracked, and potentially controlled by the government. CBDCs would work much like the digital payments you're already used to. You'd have a digital wallet on your phone or computer, where you could store and spend your CBDCs just like cash or a debit card. However, unlike cash, CBDCs are fully traceable. Every time you make a purchase or transfer money, that transaction would be recorded in a central database. This means that the government could see exactly how, when, and where you spend your money. And because the central bank controls the digital currency, they could even set limits on how much you can spend, where you can spend it, or how much money you're allowed to save. So, why should we be concerned about CBDCs? The biggest issue is the loss of financial privacy. With CBDCs, every transaction is potentially open to government scrutiny. This could lead to a world where your spending habits, lifestyle choices, and even your political views could be monitored and used against you. Imagine a situation where the government decides to limit what you can buy based on your behavior. They could restrict access to certain products or services, freeze your account, or even impose negative interest rates, forcing you to spend money instead of saving it. This kind of control over your finances could severely limit your personal freedom. Another concern is the potential for economic control. Governments could use CBDCs to manipulate the economy in ways that benefit them but harm everyday people. For example, they could control inflation by directly adjusting how much money is in circulation or enforce social policies by rewarding or punishing certain types of spending. While CBDCs offer some advantages like faster transactions and reduced costs, the risks to our privacy and freedom far outweigh the benefits. The centralization of control over our money could lead to unprecedented levels of government surveillance and economic manipulation. In contrast, decentralized cryptocurrencies like Bitcoin offer a way to maintain financial privacy and personal control. Unlike CBDCs, no single authority can dictate how you use your money. Physical cash also remains a vital tool for preserving privacy in everyday transactions. As we move toward a digital future, it's crucial to be aware of the potential dangers of CBDCs and consider alternatives that protect our freedom. CBDCs are being promoted as the next big thing in finance, but it's important to understand the potential risks they pose to our privacy and freedom. As we embrace new technologies, we must be vigilant about who holds the power over our money and our lives. Thanks for watching. If you found this video thought-provoking, don't forget to like, share, and subscribe for more insights on the future of finance and technology. See you in the next video.